real estate sector has seen signs of recovery with the return of liquidity. Let's get an in-depth outlook on the sector and the opportunities you can put your money on in 2020. Last year, the real estate sector went through a fair share of highs and lows. Today, we speak to an industry expert who breaks down what we should expect in 2020. Karibu sana on the show.
Asante sana.
Give us an overview of the real estate market today and how you see it play out in 2020.
Okay, well, as you say, 2019 was a tricky year, and towards the end of the year, things had got very flat. I mean, to some extent, that is to be expected. As you get into December, people stop making decisions, they start thinking about holidays and so on and so forth. But even going back as far as 2016, it's been very flat. Since the introduction of the interest rate cap, we've seen very little liquidity in the market. So we're hoping, as we go into 2020, with the repealing of that act, we're going to start seeing some more money in the market, and we'll start seeing some more market activity. Now, I think that we're already getting early signs of that. We're starting to see more inquiries. The phones are warming up. Certainly, we're getting more people interested in property. But the buyers and the tenants are more canny, and they're looking for deals, and they're looking for either the landlords or the vendors to adjust their prices or their rents. They're becoming smarter, certainly. They're looking to take advantage of where the economy has been for the last couple of years.
And what's your take on the residential market, the commercial market, the logistics and warehousing spaces? What would you tell us about those segments?
There's a lot to answer there. Let's start with residential. I mean, if you look at the newspaper, you see a lot of auctioneers listing properties for sale, and I think that certainly there's been a lot of activity in the residential market where there have been foreclosures and people not being able to keep their loan repayments and so on and so forth. Now, one of the questions that's often asked of us, and you forgive me if you're going to ask me this later and I'm preempting you, but talking about the bubble bursting, the real estate bubble in residential, and I've talked of a number of reasons historically as to why that won't happen in Kenya. The principal reason is the amount of lending that goes on in this market is very small. I think we had 26,200 mortgages in 2017, only went up to 26,500 in 2018, so still a very, very small mortgage market. So we're not going to see a situation where banks are offloading huge amounts of property onto the market as they did in 2007 in America, which triggered the global financial crisis. The other point is there's a piece of legislation in Kenya which prevents banks from selling a property at less than 75% of the market value, the valuation that they hold in their books. And this is a very interesting piece of legislation, because in other parts of the world, banks can simply dump property, and they can't do that here. So if they can't find a buyer who's prepared to pay 75% of the value of that property, they have to hold on to that property, which means they have to work extra hard to get rid of it. And I think that's a very good piece of legislation. The banks probably won't agree with me, but what it means is it does two things. It prevents the banks from simply offloading a property, recovering their loan amount and not worrying about what the mortgagee is also owed, but also it prevents very, very big shocks taking place in the market as well. So it acts as like a buffer to the market. So if the market is falling quickly, the house prices will fall slowly because of this protective legislation in there. So in terms of residential, I think what will happen is, as we see liquidity come back into the market, we'll start to see people in a better position to be able to borrow, to make their loan repayments, particularly developers. Quite a lot of the stock on the market at the moment that's being put out there by the auctioneers and by the banks is stock that the developers have failed to sell and wanting to sell themselves. So if the developers have access to liquidity, to money, to borrowing, they will better structure their development projects, and they won't need to offload these properties in the same way. So I'm hoping that as the year progresses, we'll see less and less of these sheets and sheets in the daily papers of properties being put out there to auctioneers. And I think that's a very good barometer of the health of the residential sector, and also to some extent the commercial activity as well.
What about the logistics and warehousing space? Where are we in that area? Okay,
so the logistics space, we started to see that market gain traction with Tartu City and Tbilisi a couple of years ago. I think the early adopters have certainly taken advantage of that. Logistics is traditionally relatively low risk and relatively low return, but the market has slowed down a little on that sector as well. I still think that's probably the best market for people to invest in. But it has slowed down a little because the people that understand the quality of that space. I mean, if you're paying 35 shillings, $3.50 in the industrial area, why would you pay 80 from 35 per square foot for high-level space? Well, of course, the people that know that space and understand it will say, well, I'm prepared to pay 80 shillings or 70 shillings because I can actually store my produce right up to, very, very high eave space. So effectively, I'm getting three warehouses for one, for the price of one. And I'm on better road infrastructure and so on and so forth. So the people that understand that have already done it, they've already moved, the likes of Unilever and so on and so forth, have taken advantage of new modern warehousing space. So now we've got to the point where the local occupiers are starting to understand the differences, trying to unlock themselves from the industrial area. Maybe they own their premises there, they have to sell it first before they can move. That process is taking a little bit longer. So although I think it's probably the fastest moving sector, with Tbilisi, Tartu City, and now Northlands, which is the Improvon Actis joint venture up on the Eastern Bypass, we're still seeing a lot of activity in that sector, probably more than any other, but it has slowed down a little bit.
What about the affordable housing program? I was expecting that the affordable housing program will get very quick buyers. What's your take on?
We're getting there. There are various initiatives that are encouraging or promoting the ability for developers to do low-cost or affordable housing and still retain a profit margin. There are various ways in which that is being done, and so I think we'll start to see that happening. And I think lifting the interest rate cap will also help in that sector as well, where we can start playing around with interest rates, with the cost of borrowing for developers and so on and so forth.
Our viewers would like to know what opportunities are available in the real estate sector in 2020.
Well, I mean, it depends on your appetite for risk. I mean, if you are a large-scale developer, then you'd be looking at, what is it that Nairobi needs? And, you'll probably laugh if I say this, but Nairobi is a regional hub. It is the center of the economic industry within the whole of East Africa. Nairobi needs office space. Now, if you look at the amount of office space that is available in Upper Hill, for example, you'll say, I can't see Nairobi needing offices for another 10 years. If you look at Westlands, you'll see the GTC, the Global Trade Center that's developed by AVIC. You'll see One Africa, you'll see the Promenade, and so on and so forth. And you think, well, there's a lot of space. Yes, there is a lot of space, but it's going, and it's going quite quick. Nairobi, as a regional hub, needs, depending on the strength of the economy, between 500,000 and 2 million square feet of office space every year that's taken up by either local mergers and acquisitions or local companies growing, or foreign and direct investment coming into the country. Now, 2 million, no, we're not there. We were there in 2015. We were absorbing 2 million square feet of space. The lowest we've been is probably around 500. So if you think, as the economy recovers, let's say, for example, we'd need 1 million square feet of office space. There's not that much out there. So, the actual supply, the pipeline, won't satisfy the demand over the medium term. And therefore, we'll see a correction in prices, correction in rents. Gradually, that will start to come up again.
What about the residential market? What opportunities do you see going forward?
I think that's harder. I would say that, looking at the list of properties that are up for auction in the newspapers, that must be the opportunity. I mean, if I was a canny investor, I would look at that market and I would say, okay, you know, where in Nairobi do I think is it going to be an up and coming address? Maybe I'm looking at the infrastructure. Where are the new roads going? Where are they coming through? Where is a developer struggling to sell? Take advantage of that. Get in at a fairly low level, but you have to be smart. You have to understand what it is the market wants. So there's no point in buying something that's
just for the sake of buying.
If it's cheaply built, poorly built, or if you think that there's going to be a struggle to maintain it, look at the people who are also in the block. Are these people who are going to be prepared to contribute to the service charge to keep the building up or not? And there are opportunities out there. There are still some very canny developments on relatively small plots in the heart of Westlands, relatively high density, that are selling residential property at good prices. So, you know, don't go in and buy just something for 40 million shillings. You know it'll never get there. Go for something where the developer is struggling, or even a situation where the project's already been taken over by the bank. If it's completed and you know that the risk is relatively low but the value is good, I think that's probably where the opportunities are.
What about the retail market? Everybody feels like we have a glut. Where are we in that space?
I think we are in a glut. I mean, you know, people would call me an idiot if I said that everything was hunky-dory in the retail space. There are high levels of vacancy, particularly in the newer malls. Nobody can deny that. However, there is still new activity coming into the market all the time. So again, it's a balance. If I am a developer or a property owner who has a well-established mall, then I can be confident that as long as I am able to have sensible conversations with my tenants, they'll come and talk to me when they're in trouble. If I can help them out and keep them and keep a good balance of tenants with low vacancy levels in my mall, then I will be okay. Foot levels have been down, okay? So people haven't had that much spending power in their pockets to go into the malls. And so having said that, those well-established malls, like the Junction, for example, had a very strong end to last year. So right from Black Friday through to Christmas, good levels of footfall considering the general state of the economy as a whole. And so well-established malls are still doing well. Those newer malls with high levels of vacancies are going to have to work quite hard. But as I say, we are seeing the likes of Decathlon and Carrefour expanding within Kenya, also LC Waikiki out of Turkey. And so that's a very positive note for us. Those international retailers are seeing Kenya as an opportunity. And don't forget that in the more developed countries in the world, retail is really suffering from online purchasing. And whilst we're seeing that grow here, we're still a little way behind the rest of the world. And so those retailers want to capitalize on those markets that still have people who want to go and spend time in shopping centers and actually see, feel and touch the product before they buy it.
And try.
Exactly, rather than just buying online. So from that point of view, we're still seen as a good destination for international retailers.
We know that the real estate sector has its ups and downs, and we are very resilient. We come back very strong. What's your final take, and when do you expect it to get better?
I think real estate tends to operate on 7-year cycles. And I think because Nairobi has been growing so strongly and so fast for the last 20 years, those cycles have been masked by the overall growth. With the slowdown of the economy as a whole, we're starting to see those cycles actually happen. So I think that we have bottomed out. We're starting to see signs of recovery. With the return of liquidity into the market, I really do feel that those rents and capital values have bottomed out, and we're going to start to see some growth in 2020.
So we shouldn't worry. Because a lot of developers and people willing to get into the property ladder are so scared. So what would we
Developers have to think ahead. If I'm going to start building something now, it's not going to be ready for 2 years. So I shouldn't be worried about what the market looks like now. I should be trying to understand what the market will look like in 2 years' time. Now, of course, we have a general election in 2022, which is in 2 years' time. But notwithstanding that, I think we should see a strong recovery in the market. As liquidity returns, the economy will start to gradually grow again. So if I was a developer looking at a 2-year horizon, I would definitely start thinking about starting a development now.
In the 7-year cycle, where do you think we are? Are we here, so going up, or we are here?
I think we're at the bottom of the cycle now.
We are completely at the
Yeah.
bottom,
Yeah.
so ready to take off? Or?
Exactly, yeah.
Okay, okay.
Yeah. I'm not saying there's going to be an instant recovery during the course of 2020. I think over the medium-term horizon, we will start to see that growth. But 3 to 4 years' time, we'll be at the peak of it again. So now, surely, is the time to pick up a cheap, either a parcel of land or a property that needs some love and attention. Now is the time to get in, if you've got that cash, you've got that money, and take opportunity of the fact that we are at the bottom of that cycle.